Thank you, Paula, and good afternoon, ladies and gentlemen. Actually, a great part of my presentation was already covered by earlier speakers such as Julia and Margaret. So I think the good news for you is that my presentation will be cut by half, so relatively quick, and not to drag you into sleep. Okay, traditionally, Hong Kong as an international financial center, our biggest strength rests with equity-related financing and investment activities. For example, I think Margaret mentioned in the last 3 years, we raised the most amount of funds from equity IPOs, and we also ranked first in terms of the total turnover of securitized derivatives. We are a premier asset management center globally, etc. In the last few years, Hong Kong actually has got a new prospect to become an offshore RMB center. We enjoy the first mover advantage and have strong support from the central government. And of all these statistics, we could see that Hong Kong has been doing pretty well. The accumulation of RMB liquidity has enabled us to build up a sizable offshore RMB funding pool and better facilitate our role as intermediary in financing and investment activities. Renminbi bonds, dim sum bonds, we raised 108 billion last year, and that has further provided additional momentum to Hong Kong's debt market. Another key benchmark is the cross-border trade settlements in RMB through Hong Kong, and that figure stood at 1.9 trillion yuan last year, which revealed a closer connection of trade and investment between Hong Kong and the mainland, and also showed you the significant role of Hong Kong as an entrepot. We also have a big cluster of banks and financial institutions which have registered to participate in Hong Kong's RMB clearing and settlement system, and which that means it made Hong Kong an renminbi hub with the largest offshore business volume and the most comprehensive range of product offerings. It has also created an RMB clearing and payment network covering over 30 countries globally. In terms of products, I think earlier speakers have mentioned deposits, bank loans, dim sum bonds, trade settlements. Now we have RPP funds, whereby investors in Hong Kong could use their offshore renminbi to invest in fixed income securities and equities in the mainland. We have ETFs, gold-linked ETFs, and I think very soon we will have market indices ETFs, deliverable forwards, renminbi insurance policies, etc. Here, I think Julia covered quite a lot, but I would like to supplement it. I think one of the key role Hong Kong plays is the proving testing ground for renminbi's development as a regional and international currency. Because in the whole process of financial reform in the mainland, financial security is of paramount importance to the central government, because they think China is less capable of withstanding severe major external financial shocks. So Hong Kong serves the perfect role as the bridge between offshore and onshore markets. Thereby, any major offshore financial crisis would not significantly affect onshore markets. This arrangement also allows Beijing to retain initiative and control over the course, timing, and pace of the internationalization of renminbi, separating the trials from the opening of the capital account, and also maintain control over the inflows and outflows of renminbi funds. So I think in the future, Hong Kong will roll out more new products and more services, as long as we do a good job of keeping sound risk management. I think we'll gain confidence from the mainland authorities to conduct more trials on more renminbi products and services. Okay, let's talk a little bit about Shanghai as well. Hong Kong and Shanghai are actually quite comparable in terms of market capitalization, because as of last March, we ranked 6th and 7th respectively, and we are also quite close in other areas. Except that I think there are a few key differences. I think both Hong Kong and Shanghai differ in our developmental stages as a financial center. And of course, Hong Kong has a freely convertible currency. We have no control over capital flows, inflow, outflow. That's why we are always dubbed as a cash ATM machine. We have a fully open capital account. But other than these, we also enjoy higher market liquidity, more competitive pricing, rule of law, a more transparent and independent regulator, world-class financial infrastructure such as our RTGS, real-time gross settlement payment system in 4 major currencies, including renminbi, optimization of technology and information flow, low tax regime, full range of services and products, etc. Whereas Shanghai currently, I think, is a major domestic financial center, but it has got national policy support to become an international financial center by the year 2020. Shanghai also enjoys unprecedented access to the strong industrial base in China and is in a very good position to benefit from the strong growth of the Yangtze River Delta economy. And apparently have advantages in absorbing mainland capital and talents, strong in innovative technology and commodity markets, etc. So inevitably, there will be a certain degree of competition between Hong Kong and Shanghai. For example, in areas in soliciting mainland listings, in allowing foreign companies to issue renminbi bonds, in pricing, in trading, etc., in product innovation, etc. But personally, I think Hong Kong and Shanghai should not be a zero-sum game. Should both cities actually achieve better coordination and cooperation, China as a nation would have a much greater say and influence in international financial matters. So my suggestion is to focus more on cooperation, avoid excessive competition, and complement each other's inadequacy. Explore areas for practical cooperation, such as A plus H shares, or what we call first A and then H shares. Cross-border establishment of financial institutions and provide trainings for financial talents. Cooperation in listing, product development, and information exchange. One possible idea is to have renminbi-denominated HDRs, depository receipts issued by Asia companies in Hong Kong. Just some ideas to toy with. Co-establishment of market indices, ETF, etc. But we also have to be mindful of competition from other overseas cities such as London and Singapore, because London has a huge foreign exchange market and also is in a different time zone, so it's better able to facilitate pan-European trading. So we got someone to watch over us. The last slide is actually what many people talk about. I think the real challenge for Hong Kong will come when renminbi becomes fully and freely convertible. According to a report this year by People's Bank of China, they have actually stipulated a rough timetable, for the renminbi to proceed towards full convertibility, breaking down into short-term, medium-term, and long-term, with different measures to be taken. It's a long way to go, I think, but during this period, I think Hong Kong should not just sit back and relax, but rather Hong Kong should pioneer more experimental measures and strengthen our position as an offshore financial center. Because I think, actually I share, some of the speakers' conclusion earlier on that China is actually big enough to accommodate 2 major international financial centers. But the issue here is, first of all, Hong Kong has to remain, the biggest and the best offshore renminbi center. And we should also be able to better define our strategic positioning compared against Shanghai when one day renminbi becomes fully and freely convertible. And with that, I would like to pass the floor to the next panelist. Thank you.